Hi everyone, welcome to FinTech Academy. This is Harsh. Today I will go over the 13 steps of pay cycle process for Canadian Payroll. Alright, let's get started with that. So the step one in this 13 steps process is gather all information for the payroll processing. What we gather is a static information for employees and the pay cycle specific data for employee. Now static information is generally which is constant, i.e. like the name of the employee, the address, the social insurance number, the date of birth. Those things will go and sit in the static part, which generally won't change. But the pay cycle specific data could change by each pay cycle. Now what is a pay cycle? Well, that will depend if the company is paying weekly, bi-weekly, semi-monthly, or monthly, whichever is the pay cycle, right? And let's say if company pays weekly, then there could be a change in let's say regular hours is 40, but there could be overtime hours which can change. There could be a holiday pay given, that could be a stat holiday. So basically to gather all that data from for each employee from different departments or the individuals or the managers, and that is the step one in this pay cycle. Step two is the part to calculate taxable benefit amounts needed for the calculation of pensionable and taxable income. Now, if there are any kind of taxable benefits given in an organization, then you would like to get those amounts, right, as a payroll administrator, and you would like to calculate the pensionable and then taxable income on that. Taxable benefit, pretty large topic, right? I won't go through much details on that because we cover that in the course that we teach about the payroll administrator. Next comes to step three on that, which is calculate gross earnings. Gross earnings is any type of earnings that has been earned by the employee. So it could be wages, salaries, taxable allowances, non-taxable allowances, or everything will go and sit over here. Of course, not reimbursements. If there is any kind of reimbursements that has been done to the employee, then those are not considered as a gross or as a part of the gross earnings. And generally most of the companies, they don't do the reimbursements on the payroll, they do it through accounts payable. So gross earnings, yes, you want to get that accurate once you have that. So next is a step four. Step four is calculate pensionable earnings, which is gross earnings less non-taxable allowances less termination payments plus taxable benefits. So in this case, generally the gross earnings is from the step three, which we had a look over here, less any of the non-taxable allowances. So if there is any kind of allowance that has been given which is non-taxable, that will go and sit over here. If there is a termination payment that has happened in the company for anyone, that will go taken away, plus the taxable benefit. So anything that is a taxable benefit, that will be added back to come to the conclusion of pensionable earnings. An example of non-taxable allowance could be, let's say if on a paycheck, let's say every employee has been given safety shoes to be worn at work, right? Now that is a non-taxable allowance, so that will be taken away from there. There could be taxable benefit which has been given, then that will be added back in the step number four for the calculation of pensionable earnings. If you're using a software, then generally you may not need to worry about the calculations, but probably you may have to define whether an individual payroll item is it a non-taxable allowance or is it a taxable benefit for the organization, which is a very important step, defining the payroll items. Step number five, which is calculate insurable earnings. So gross earnings less non-taxable allowances less termination payment will fetch us the insurable earnings. Now the difference between these two, as you can already see, everything is same except that taxable benefits get added back in this pensionable earnings, whereas those don't come into picture when you do the insurable earnings. Okay, step six is calculate CPP contributions. So what is CPP contributions? How do you calculate? Well, pensionable earnings, which is from your step four, less pay cycle exemption times 5.45%, which is the current 2021 rate. So pensionable earnings, we get it from step four, and then we take away the pay cycle exemption, which is an amount of $3,500 or $3,500 per year for every employee as prescribed by CRA. So pay cycles exemption means if it's weekly, then you divide it and by 52 and you get that amount, and that's what you take it away from the pensionable earnings and you times it by 5.45%. That is going to be your contribution for the CPP amount, which is the Canada Pension Plan. Then comes the step number 7, which is calculating the EI, which is employment insurance premiums, which is fetching the amount from step number 5, which is insurable earnings, times 1.58%, which is the 2021 rate again. Then we go to step number 8 over here, which is calculate gross taxable earnings. How do we do that? Well, gross earnings less non-taxable allowances plus taxable benefit, which will give us gross taxable earnings. Well, once we know the gross taxable earnings, then we go to step number 9, because now we are going to calculate the net taxable earnings. This is the amount on which the payroll tax will be calculated. So how do you come to that? Well, from the gross taxable earnings less employees' deductions, if there are any of the deductions for the employees, like for RPP, which is a registered pension plan, RRSP, our registered retirement savings plan, union dues, or any other amounts which are prescribed by the CRA or as per CRA, those will be deducted from the net taxable earnings. So of course that amount is going to go down from the gross taxable earnings to net taxable earnings. The lesser the amount on that, then step number 10, which is the federal income tax, will be lesser. Federal income tax is to be calculated is the next one. Now income tax, of course, if you're using the software, is going to spit out for you, or you can also use PDOC, which is payroll deduction online calculator, given by CRA as a free tool for calculation, and from that you'll be able to find out, it will spit out all the numbers for your federal income tax, as well as the step number 11, which is calculating the provincial / territorial income tax. As we know, in Canada, by federal there is a taxation, and also by each province or territory there's a taxation on that. So that is going to be the step number 11. Now once both the taxes are calculated, we go to step number 12, that is going to be the total deduction. So total deductions will include both of these taxes on step 10 and step 11, plus it will also include the CPP calculations, the deduction amount on that. It will also include the EI, which is employment insurance deduction amount on that, plus any other deductions if there are any for the employee. Everything will be added on this step number 12. Then comes the last and final step, which is calculating the net pay in step 13. How do you come to net pay? Well, gross earnings, we already have that as we saw in step number 3 on the previous slide. So gross earnings less your step number 12, which is your deductions or your total deductions, minus that, and you're going to get the calculation of the net pay. Right guys, so hopefully the steps that we went through, which are the 13 steps for the calculation of the pay cycle, would help you guys out. But of course, Canadian payroll is a huge topic, because there are hundreds of legislations, there are rules and regulations which are to be followed. This is just a small little topic describing the overall payroll process. Well, if you found this video helpful, please like our video and subscribe to our channel for more videos. We cover most of the details in our Canadian Payroll Administrator course. If you're interested, then yes, you can definitely visit us at fintechsolutions.ca for our courses. Also, let me know in comments what would you like to see in future videos, i.e. Harsh, I want to see this video, or Harsh, can you make a video on this topic for accounting and bookkeeping, QuickBooks Desktop, QuickBooks Online, Microsoft Excel, Canadian Income Tax T1, Canadian Income Tax T2, or Canadian Payroll. Thanks for watching.